Hey traders, how's it going? Brandon Carter FX here, aka Mr. Golden Ratio, and we are now entering the new chapter, the new topic of trend lines. Trend lines is basically another form of support resistance. As you know, trading is all about finding a confluence of things to happen, of rules to be met before making a trading decision to go long or to go short. So, in the previous chapter where we covered support resistance, this chapter we're covering trend lines, another form of support and resistance. But support and resistance in the traditional sense is typically lines that go straight across, like you see here, support resistance line here, and like you see here, support resistance line here. Okay. Um, Trend lines, by definition, is you know a way of another rule to be met to determine directional bias in the market of basically showing momentum shift, momentum change, to help you decide whether you should be looking for long opportunities or to be looking for short opportunities. So here on the daily chart, Euro USD, you are looking for, um, and first of all, what determines a trend line? What is an accurate trend line? Because a lot of people, you know, um, draw the trend lines wrong. They draw the trend lines incorrectly. Because they're trying to stay, stick too sharply to a particular way of drawing them, or they just don't have an eye for it and just can't draw them at all. So by definition, for me, in regards to how I draw trend lines, is any 2 points or more of equal reaction, any 2 points in the market of equal reaction. Prime example, we've got these 2 points, these two bounces, so to speak, right? We've got this whole bounce here. Market came down, and then we got another bounce, and the market came down. Okay. So, that being said, that determines an official trend line. Connecting, typically, how I connect my trend lines are by the wicks. You'll notice let me just delete this. See how I drew this on. All right. So I know I want to draw a trend line there. I'll bring it around. Boom. Right at the wicks. Or, I start the trend line at the tip of the wick of the first point, and more times than not, I will touch it to the top of the rest of the wicks or slightly through the rest of the wicks, as you see here. Right? So right to the tip or slightly through, just where the most points of contact are most consistent, right? All right, so that defines for me what an official trend line is. Now, how does that help me in determining whether to go long or short? As I said before, the purpose of a trend line is to determine a momentum shift and establish a directional bias in regards to whether or not you're going to be looking to go long or go short. And as we know, we're looking for rules to be met. So rule number one, waiting for price to reach a strong support resistance area based on the daily and weekly charts. Okay. So as you see on the daily chart, we have this support resistance area. We have this support resistance area. Another support resistance area, obviously, right, can be drawn in this area, right around here. Okay. Right around this area. Why is this area significant? Because we have it came through, well, it came up to, reacted, came down, broke through, came down to this area, bounced, right? Came down to this area, bounced off. Came down to this area, bounced off. Finally broke through here. Came back up, broke through again. What did it do? Came back to this area, bounced off it, came back to this area, bounced off it, and it's based off of what? The daily time frame. So again, we never make a trading decision based on one thing. Oh, it came through a support area, put in a, a buy order, or it came up to a resistance area, put in a sell order. No, it's a multiple things that have to take place. So rule number one, what are we waiting for? Price to come up into one of these support resistance areas. That's number one. Number two, to help us decide what we're going to do once it reaches that area, trend lines, which is the chapter we're on now. So before this trend line got drawn on, let's take it away for a second. Market would have been, support resistance line would have been drawn way back here because of this major reaction, right? And the market price would have been up here. Trend line, I mean, the support resistance area would have already been drawn across, so we would have been expecting some sort of reaction down here on the daily chart, right? So as the market's falling back to this area, what are we doing? We are connecting points. Here we would have connected these 2 points. Okay, boom, boom, right? Of equal reaction that I specified earlier, of at least 2 points of equal reaction. That's my definition and how I analyze. So on a lower time frame, on the H4, that same area looks like this. So just to get more detail, right? But let's take it back to the daily. So boom, the market's here, market's falling back, right? It's falling back to this strong support resistance area. We're waiting for rules to be met. Number one, wait for it to reach that area. As it's falling, boom, we're setting our trend line. Number two, what are we waiting for? A break and close above the daily trend line, above the trend line on the daily chart. So that's rule number two. Number one, let me draw my support resistance lines on my strong based on the support of the and resistance of the daily and weekly chart. All right, you got your game plan on. You know that's what you're waiting to happen. Number two, you're waiting for your other rule to happen after drawing your trend line properly. What is the proper trend line? Any 2 points of equal reaction or more. Any 2 points or more of equal reaction. Okay, so at that point it would have been these two, right? And as the market was coming down, you would have seen it were respected. You know, it's coming time. It's coming close because something's gonna happen. It's coming down to your support resistance line, right? But now all you're waiting to do is figure out what's going to happen with this trend line. Okay, still no break and close. All right, so only one of your rules have been met at that point, which is it's coming down to a support resistance area. All right, you've seen it come through, no break and close above the trend line. All right, but here you would have seen a break and close on the daily chart above the trend line. Now you know to look for longs. It is now officially in the buy zone. So two of your rules have been met. It came down to a strong support resistance area, came back up above that strong support resistance area, also closed above on the daily chart a strong bullish candle above your trend line that you had in place, that you have in place. So now two of your rules have been met. Now what do we do? How do we, okay, boom, it's broken. You ask yourself, hey, it's broken and closed above on the daily chart. How do I, how do I know where to put my stops? How do I know where to enter the market? All that. Well, we look for the same things to happen on a lower time frame. The same things to happen. Support resistance. Wait for price to get to one of those strong levels. And for a trend line to be broken and closed above on whatever time frame it is you're analyzing at that time. At this time, we're analyzing what? the daily chart. So then we'll be waiting for a break and close above the trend line on the daily chart and above that support resistance area. If we're going to drop down to a lower time frame, okay, so now you say, okay, well, a daily candle's closed above the trend line on the daily chart that I was analyzing and above support resistance area. Now what do? Well, drop down to a lower time frame so you can start to try to execute your order following the same rules, like chapter 1, waiting for it to get to a support resistance area. All right. And number 2, waiting for a trend line to be broken and closed above on that particular time frame that you are analyzing. So here, this right here is where you got that daily candle close above on the trend line. That's what you had been waiting for. All right. Nothing on the right side of this line was, none of this over here was in play. We only had that daily candle close that we're waiting for our rule to be met, and it happened right here. This is just the lower time frame, H4, but this is what it looks like on H4. On the daily candle, on the daily chart, it looks like this, right? On the daily chart, it looks like this, that bullish candle close above. H4, what does it look like? It looks like a few candles, right? Because you're getting more detail out of what's taking place here. So now, boom. So you get down to a lower time frame. You say, okay, well, what do I do now? How do I execute? Well, what do we wait for? Trend lines to be broken? What will we waited for? Boom. We would have connected. How do we know how to draw this trend line here? Based on minimum of 2 points of equal reaction, connected, and waiting for a candle closure above, if you're looking to go long, above that descending trend line to go long. When did that happen? When did that closure above the trend line happen? Boom, right there, that candle close. So at that point, you could have, on a lower time frame, that happened, you could have literally entered the market there, put your stops around the lows, and rode it for a good 1-to-3 ratio, 1-to-2, 1-to-3 ratio for a good 170 pips, right? Because you were patient and because you waited for rules to be met. Get it in your head. Look on the higher time frames, weekly, daily, support, resistance. Okay, waiting for it to get to that area. Boom, you're down on the daily. You're looking at it. All right, it's in that area. Now what am I waiting for? Breaking close above or below the trend line. Boom, now that happened. Now what I'm looking for. Zero it down to a lower time frame. H4 in this case. Waiting for the same rules to be met. Come down to that support resistance area. Connect 2 or more points of equal reaction. And wait for a close above or below, depending on whether you're going long or short. Wait for a candle close above or below the trend line on that time frame. Boom, that happened. Now what? Well, now you're on a low time frame. Boom, that entered. Now you may say, well, you know what? I don't want to stop. I don't want to stop loss that big. I don't want to stop loss that big. How do I narrow it down? Well, guess what? You follow the same rules. This is the trick. This is the aha moment, right? This is the aha moment. You follow the same rules. It's not complicated. Trading is not complicated. People make it complicated. You follow the same rules, waiting for the same thing to happen on a lower time frame now. All right, so all these different rules have been met on a higher time frame. First of all, let's mark the area so we can, as we drop it down to the lower time frame, we know the area that we're looking at. So this area right here, point this arrow to it. This area right here, got the arrow pointing to it. Got the arrow pointing to that 4-hour candle closure above that trend line. Now that at this point that at this point that has happened. Now you may ask yourself, okay, great. that rule has been met. But I really don't want to do a big 70 pip stop loss. I really don't. How do I bring that, bring that bring that stop loss down a little bit? Well, you look for the same things, right? Support, resistance, trend line breaks. Just go down to the higher time frame. So we'll look to see what happened right when that area, right, right at the tip of that arrow. So what I'm gonna do is drop down to a lower time frame when that happened. Let's drop down to a lower time frame when that happened. That 4-hour candle closure above happened right here. It happened right there. At that moment, it happened. So at that point, now what do we do? As you can see, it did. This would have been a previous. This area right here would have been a previous resistance to potentially become support. That didn't happen. It didn't come all the way down here. It went up to here, pulled back here, and started to go up more. Okay, so what do you say? Well, what would we have done at that point? All we would have had to do is wait for that rule to be met. Boom. Draw your trend line. And of course, this area, for the sake of time, this area right here on a lower time frame looks like this. Let's just be clear. This area right here on the 1 hour, on a lower time frame like the 30-minute or the 15-minute, looks like this area here. More detail and more candles. Okay, so but you know, we would have looked for the same thing. Would have drawn a trend line connecting two or more points of at least two or more points of equal reaction. Boom, we would have done that. We would have got the candle closure above. Boom, that happened right there. And we could have simply put our order in for a buy and got away with the stop of around 15, 20 pips to be safe. And the market would have hovered around your entry annoyingly for the next 20, let's see, 23 hours. Basically, you would have been at roughly break even for about a good day before the market finally started to take off in your favor. And that's proof in patience paying off. And it would have paid off a lot in this case, waiting for those rules to be met, all based on what first took place on a higher time frame. So um you know so that's what trend lines help do. That's how you use trend lines to help you make uh trading decisions. And again, we all started from the daily. We started from the daily chart and waited for rules to be met, right? We started from the daily chart and broke it all the way down to the hour and lower time frames, waiting for the same rules to be met. Come to a support resistance area, wait for a counter trend line break. Come to a support resistance area, wait for it. Now, that's only two rules. There are more rules to be met. There are more rules to be met. This is only two of them. That's why, people think, trading is so easy. They just try to jump in the market. It's like, no, there's rules to this. There's patience that's involved. There's things that you need to wait for to take place. And this is what you wait for. So let's say we were looking for a short. Okay, same thing applies. Let's say we were looking for a short, and we have our support resistance areas lines drawn on, right? And we know the market on the daily chart is coming up into a strong support resistance area, meaning we'll be looking for we'd be looking for a reason to get short on the daily chart. Well, what are we doing? Connecting two or more areas of equal of it two at least two or more areas of equal reaction, at least 2 points of equal reaction. So we know at this point, the market is coming up into a strong level, say here. All right, so now the market has reached there, and we want to know when to go short. Well, what would have we done? Now we've got a bunch of wicks here. Now for the trained eye, you could easily see these two bounces, right? You could easily see these two, this bounce here, right? This one and this one. But for the less trained eye, you may need to break it down to a lower time frame to really see what's going on. So let's break it down to a lower time frame, okay? Let's break it down. So that same trend line that's drawn, you would have gotten more detail and would have been able to get a more clear vision of where to, where to connect your points and draw your trend line. So this is how it looks on the 4-hour with more detail in the picture. So now you can see where that trend line is valid. All right, boom. So on the daily chart, you're waiting for price to get up into this area. Boom. All right, time to clap your hands. You're excited because you know a good shorting opportunity is potentially in play. What are we waiting for? On the time frame that we are currently analyzing, in this case the 4-hour. So we got this trend line drawn on. We're waiting for that candle close below on the 4-hour chart. So boom, we're up in this area. At this point the market is, let's say, right here. All right, we know a good short is coming, but it hasn't met our rules. It's met one of our rules coming to one of our support resistance areas, which is this line here. But we needed to meet another one of our rules, which is a candle closure below our descending trend line on the 4-hour chart. All right, which really happens let's see, we've got the trend line would have been drawn here like this. And at this point, what are we waiting for? On the 4-hour candle closure below. Boom. It happens there. Now we know momentum has shifted. Even though after it broke, it decided to pull back for a good 120 pips. That's fine. That happens. We know we are still in the sell zone. Notice it's not back above and, starting to make those, higher highs and higher lows back above this trend line. Notice all this action, all this fake bullish action is all happening in what we call the sell zone. It's still in the sell zone. So we still are only looking for shorts in this area, even though after that 4-hour candle closure below the trend line, it rallied for a good 120 pips for a few days. We know overall we're still looking for shorts because these rules were met. Trusting the process. Okay. So at that point, what would we have done? What would we have done? How would we have entered this market? How would we have taken advantage of this opportunity on the 4-hour? Well, we know we're looking for what? Those two rules first. Not saying that it only takes two rules to be met to enter a trade, but we're looking for, anytime we're entering the market, we're looking for two rules to be met. Number one, coming up into a support resistance area, previous support becoming resistance, or previous resistance becoming support. Number one. Number two, trend line break. Now we're waiting for rule number one to be met. Come up into a support resistance area. And as it's reaching there, as it's climbing there, what we're doing is connecting those bounces and waiting for that, that trend line to be broken. And as you can see, we wouldn't have just gotten short there. We wouldn't have just gotten short here because, it came up into previous support and now resistance, enter a sell order. No, we need another rule to be met. Counter trend line break. Did it happen here? No. At this point, we would have adjusted our trend line. Right? We would have adjusted our trend line because at that point, some kind of gap closure, gap in the market happen, but we still got a candle closure above and it was bullish. So we would have adjusted our stop. I mean, not our stop, but we would have adjusted our trend line at that point. So still waiting for the same thing on what, a lower time frame, um, to to on a lower time frame to find a way to get into the market uh, at a better price and with a tighter stop. So at this point, our trend line's adjusted. We need that tighter stop. Let's drop down to the 1 hour and attempt to look at the same exact area. Now this is the lower time frame, looking at the same area. Boom. What are you looking for? What are we looking for? Now on the lower time frame. All right. So on the higher time frame, the H4, we had that candle closure below. Um, but we needed to reach that support resistance area. On the lower time frame, the H1, we've got that trend line break. What are we waiting for? Bearish candle close below. It happened here, but it fell too far. You would have missed this whole, waiting for that 1 hour candle close, you would have missed this whole 120 pip drop. And that's where people be like, oh my God, it's falling so much. I'm waiting for my rule to be met, but I'm gonna miss out. I'm gonna miss out. They would have entered the market probably here, and it would have risen against them like 100 pips. It would have looked like it turned against them. So I'm not gonna rush into it. I'm gonna wait for it to come back up into a support resistance area, and then as I'm waiting, right, as you're waiting for the market to come back up into one of those areas, because you're not even interested in the market until it comes into one of those areas, you would have been drawing your trend line all the while. Right? You would have been drawing your trend line all the while, knowing that you're not even interested in the market until it gets up in this area. Right? So, boom. You would have drawn your trend line. Boom. Bearish candle close below happened right there on the 1 hour current time frame that you're analyzing. And at that point, you could have gotten in with a much tighter stop of around 45 pips as opposed to 200 and something pips as you were seeing before on the H4 or daily. Now only with a 45 pip stop, and you could have rode this thing for easily 200 plus pips easily. And this is why, people ask me like, how are you able to see the market in such a way and this and that and get in at the right time and make certain calls and projections? Because I follow the same rules no matter the time frame. I follow the same rules. I look for the same things to happen, on whether it's the daily, the H4, the H1, the 15-minute, the 5-minute. It doesn't matter. I wait for the same things to happen. I need to see it come to a support resistance area before I'm even interested. Number one, I need to see a candle closure above or below the counter, ascending or descending trend line. Number two, and in a case like this, if it falls too far, well, I'm still not getting in the market. I'm waiting for it to come back up into a support resistance area, and then while it's doing that, I still need it to close above or below a trend line, and then that's when that would have been drawn on, and then boom, it happened there, and boom, we would have been short. So that's how you avoid being kicked out of trades or entering the trades too early or getting in short, and then as soon as you get in short and the market turns around on you, all that baloney. Being patient, waiting for rules to be met. Support resistance, come into that area or else I'm not even interested in what you got to offer me. Number two, trend line break, closing below, above or below on with the full bullish or bearish candle closure on the current time frame being analyzed. And if it falls too far, go back to number one. You need to come back to that support resistance area, and as you do so, I'm drawing my trend line waiting for you to break and close below that, and then boom, it happened there. Right? So that's how that's done. Short. You've seen the long, you've seen the short, and trend line, again, support is another form of support resistance. Uh, by definition, by my definition, of minimum two or more points of equal reaction. Looking for at least 2 points of equal reaction. Um, and so, that's how you decide, or that's how I decide whether my bias on any given pair is long or short. What type of opportunities I'm looking for are based upon what happens after price reaches these areas. What does price do when it reaches these areas? Does it meet my rules? Does it meet my rules in order? First coming into that support resistance area, and then closing above or below that trend line. Um, whether it closes below that counter trend line with a bearish candle or bullish candle, depending on whether you're looking for longs or shorts. So, that pretty much concludes trend lines. Again, we have more rules to be met. We have more chapters, obviously, and we have more rules to be met. That's just rule number 1 and number 2. There's a few more rules to be met. This is how you really dial it in, and we're about to really start getting into the sauce. All right, to the real sauce, to the proprietary stuff. So I'll see you guys in the next chapter, round numbers. Join me in chapter 3, round numbers, and the significance of price.